Welcome to TradeTheMBI.com. This is John. This report is for January the 4th. Well, we got a continuation in what we were looking for to continue. And what we were waiting for is this steel to come back over the 13.5, because as we've talked about, when it reaches the negative 13.5, it's effectively coming from the top, because this would be a cylinder if we could depict that in three dimensions, but we can't. So as it rises back above 13.5, we should get some support from short-term buyers. We are below the red line, right at the ABM green. So this is what we were looking for to even out what had been a parabolic move that not sustainable over time. You can do it for a short period, but then it has to flatten out, consolidate before it can move, at least effectively. Otherwise, you create an even bigger danger. We still haven't filled this positive extreme uh, right there at the 46.98, and then of course the beginning of the initial run right there. So we could see some movement back and forth, but it's a question of whether or not there's enough short-term buyers just to keep that ABM green. And if that breaks below, then I would expect the fill of the positive extreme, at least from the large portion right there, and then secondarily towards that 76%, which would be much more interesting from a market standpoint, because that would satisfy some of the pressure that's built up. And news or anything like that related to it is just a normal cyclical thing. This isn't anything that's special. Um, Economic reading wise, things are still mixed, I think is the best way, but still moving along. So, from that positive standpoint, uh, economically, you don't have any real major changes, which posits the question why the Fed would change anything. From a Treasury standpoint, of course, we started to move back towards normalization and then puked, and everything went sideways, and we went back up and lowered yield. So again, the bond market way ahead of reality at this point. So their confidence in the Fed to cut significantly uh, as the year moves on is already priced in. So any changes would be dramatic change for the market in its belief. Oil, reasonable. Again, we watch anywhere in this range above 75 starts to become a concern, particularly if we take out this previous range right up in here and just above below 76, because at that point, then you put that inflationary pressure back on, and if you start to build that, and of course, there's plenty of geopolitical reasons why that could happen. We had a massive crude draw as well that was reported, so economic activity still up there. So it's going to be an interesting one to see a growing and improving economy with inflation still above targets and the Fed wanting to cut into that. Going to be interesting. But then we already said that there was a problem from even last year as the Fed raised rates. How are you going to sustain this with the debt? Because it's just going to exponentiate, and it's unsustainable given the amount of spending that they're doing. From a euro standpoint, continued its decline. Of course, is already excessively high anyway, and pretty comfortable from where the Fed and them are looking at and maintaining support for Europe. From a gold standpoint, it caved as well. Not a whole lot of justification for any of these moves, but some of this was related to also what was happening in Bitcoin. Of course, there were some articles that the Bitcoin ETF might not get approved, and some of this stuff is a little bit of nonsense. I mean, we needed to just see back and forth. The readings had been relatively soft overall in general from it after this big push up, and the other thing of the halving, where everyone thinks that the ETF and that's going to create all this buying and stuff. It's kind of strange, because that would have taken place back here in the consolidation, in the expectation, because the big players, they're not going to be buying it when it gets approved. They've already acquired anything that they're going to be involved in. So people, the logic sometimes. I was watching a Instagram where a guy was trading the Bitcoin during this dramatic move during the intraday stuff, and he did a 70% drawdown of his total capital. And then, obviously he held on to it because, it's a religion for some people in the cryptocurrency world. Ended up being okay, but at the end of the day, he thought that was a successful trade. And I'm like, anyone who's willing to take a 70% drawdown of their entire capital in one trade is a gambler. That's not trading. That's completely out of whack with being successful. So it's always sad to see those kind of videos where they think, oh, wow, it turned out okay because we had our target. You can have a target and you can still be way off, and that kind of drawdown is not okay to go through. No reason not to have gotten at a reasonable stop then and been able to buy back at a much lower area and ride a real signal back up. Actually, I even have a 250 tick. And you can see, I mean, it had started that short signal from before and carried through. I mean, no brain surgery there, but to ride that all the way down in anticipation of it coming back up some crazy. ETH, likewise, a little bit softer below 76% range. And again, not looking particularly strong in that. You got negative shakeout in that. So could see some more volatility within that space. From a 50K standpoint, it's all been pretty clear. We're heading right back down towards these positive extremes that it set up before, not too different than we see on the daily. Pretty close to range. MBI white lead moving back towards the zero. And we really didn't have a whole lot of MBI white spikes except for right at the peak. And we went over the calculations for how to do that double deduction right there to capture the low that ended up taking place. And then the difference being is, yes, you still have these at the negative 13, but you have to move back up to positive. I did show one over here that was a failure of that construct right here, because this projected the much lower move even further. Now, that could result. So this creation right here, where we take the positive to the negative 13, resulted in like an 80-point move. Instead, we only got 40 of it, and then things turned around. Now, obviously, you would collect profit at some point through there and trail it with a stop, even still looking for your target, because to blindly just go with that is a little bit aggressive, I think would be my term for it. When we look at the daily from a 5-minute standpoint, we started off from the previous day weak and continued down. And sort of stabilized, moved up, and then towards the end of the day, sold out, took out all of the stops going lower. So it was attempted a short cover, didn't get a whole lot of activity from that short cover rally, and that caused it to fade. And that's where we ended up for the day. And then here we are in the pre-market, pretty much stabilized, moving back up towards this 50% range, which is right where we're at the top of right there. I would call this healthy so far. We're not seeing anything, relatively speaking, from a market breakdown that would suggest that there's anything catastrophic in the move. It's just normal fluctuations. As always, though, if anything relevant pops up, I will certainly put it on the Skype chat. But, this is why we put those key elements from a daily standpoint. We knew we were looking at the ABMs, break of the yellow, and then when it came to the magenta, expectation to that ABM green, which we've got. And I still think that we're going to need to make a move towards that 76% really to smooth things out. It's not to say that we're not going to get a pushback up before then, because a lot of times you can get a consolidation, but eventually we will get that fill back. Is just a matter of following. It's a pretty clean DOC spread from a daily standpoint, so there's some built-in weakness to the setup as it is. That's the long and the short of it for right now. As always, though, trade well. We'll talk to you later.